Hello everyone, here are the latest market news on December the 3rd, 2019. US may impose tariffs on French products. The U.S. government on Monday said it may impose duties of up to 100% on $2.4 billion goods from France as new country's digital services tax would harm U.S. tech companies such as Alphabet Inc.'s Google, Facebook Inc., Apple Inc., and Amazon.com Inc. The list targets some products that avoided 25% tariffs imposed by the United States over disputed European Union aircraft subsidies, including sparkling wines, handbags, and makeup preparations. Products that would hit French luxury goods giant LVMH and cosmetics maker L'Oreal hard. Furthermore, U.S. Trade Representative Robert Lighthizer said the government was exploring whether to investigate the digital services taxes of Austria, Italy, and Turkey. French luxury companies fall amid tariff threat. Shares of leading luxury companies in France decreased on Tuesday after the United States stated it will impose new tariffs on French products. Shares in French luxury handbag maker Hermes fell by around 2%, while luxury goods companies LVMH and Kering lost 1.5% and 1.2% respectively. Glass bottle maker Verallia, which makes glass containers to brands such as Dom Perignon champagne, declined 2.5%. Japan will spend $120 billion to support economy. Japan, the third largest world economy, is planning to spend $120 billion as an economic stimulus package to support short growth, two government officials with direct knowledge of the matter said on Tuesday. The spending would be earmarked as a supplementary budget for this fiscal year to the next March and an annual budget for the coming fiscal year from April. Both budgets will be compiled later this month. The package would come to around 13 trillion yen, $120 billion, but that would increase to 25 trillion yen, $230 billion when private sector and other spending are included. The Nikkei Business Daily reported on Tuesday that the government will mobilize construction bonds, unused money from the previous fiscal year's budget, and fiscal investment and loan programs to secure necessary funding. UniCredit plans to buy back its shares, cut jobs. UniCredit, the biggest bank in Italy, announced on Tuesday its new four-year strategic plan with €2 billion, $2.2 billion of share buybacks. The company will also cut around 8,000 jobs, more than 9% of staff, to reduce costs by €1 billion, $1.1 billion in Western Europe. As the bank operates in a negative interest rate environment, UniCredit forecasts net profit of €5 billion in 2023, which is slightly above the €4.7 billion expected this year. Lenders' shares climbed as much as 1.5% in Milan trading. UniCredit's stock price is up 28% this year. That compares with a 2.5% gain by the Stocks Europe Banks Index. North Korea accuses the U.S. of drag-out talks. North Korea said on Tuesday that the United States was trying to drag out denuclearization talk ahead of the U.S. presidential election next year and issued a veiled threat to Washington to soften its demands, state media reported. Rita Song, North Korea's vice foreign minister in charge of U.S. affairs, accused Washington of being keen on earning time instead of making concessions. What is left to be done now is the U.S. option, and it is entirely up to the U.S. what Christmas gift it will select to get, Ri said in a statement on state news agency KCNA.